I've made this link tree so it's easier for you guys to get into contact with me. If you want to find out more about the course, it's over on my Buy Me a Beer. If you want to simply get into contact with me, it's over on my crypto Twitter or my crypto Instagram. How's it going, everyone? It's Louis Crypto here, back with another crypto update. We do this every single weekday. Now make sure you are following my Twitter. Here you go. Here's the @Louis_crypto. The link is on my link tree in the description down below or in the top right corner. After this huge dump from 25k down to 19.5k, we saw the reclaim of this golden pocket over here. We were saying Bitcoin looked like it was setting the stage for a pump towards 30k, and since that, currently price is up 20%. So if you did take that, incredible. Let's head over to the weekly time frame and see what's going on over there. What we can see at the moment is this inverse head and shoulders playing out. If we want to get a technical target, we can just do this, put it on the breakout, and we can see that it's telling us that we should be expecting anywhere between 33 and 39k. Back in January, I was already talking about this in my Discord group chat. If you want to be part of it, where I do teach you how to read the charts, there are two options. With both options, you can join the chat, and that's either through the one-to-one mentorship, where you get 10 hours of one-to-one help with me, as well as a 6-hour-long 30 video course. If you just want the course, then you get the course and the chat. Just private message me on my Twitter, and the link tree is down below. So continuing, we are still anticipating 30k. We will zoom down on the lower time frames, so smash the like button for that. We're going to talk about the rising wedge that we're seeing on the lower time frames, but also a bullish pattern. I think if we scale down even lower to the 15-minute, I am seeing some bullish patterns, so please stay tuned for that. That'll be coming up very soon. Now, again, on the weekly time frame, I've placed these fibs from the top over here to what could be potentially our bear market bottom, and we can say this because we were calling for closes above 26.4k, and I will believe that the bull is here because we would be making higher highs above this over here, as well as taking out this special EMA over here. Now everyone's used to this orange one, which is called the 55. But if I change this real quick to the other one, there you go. There's another one over here called the 69, and I was just simply waiting for a break above that. I'll show you exactly why. So here are the two. So the 55, we can see a few closes above. Now you're going to have this with any moving average anyway, but look, I have a second layer of defense over here. Here, nicer respect. Yeah, it was respecting it nicer over here. You still get your fake outs, but yeah, just play around with that if you want to. Let's place these fibs, which are giving us this 30k target, or 29,500 target. So it's very close to our psychological level of 30k. So that's why I think that if we're coming in towards there, we're probably going to get a tap of 30k. Now we do have higher targets. Remember, on the weekly, we have 32 and 38, sorry. And then on the daily, it's also saying, as long as we're above 23,000, we should still continue up to these high price targets. And we've got this acting as confluence, the 0.5 fib, tying in with this 2 fib, 32,500. This is where we're going to be getting pulled towards. Look at that, this high over here, this lower high. We're trying to break higher. So these are all lower highs that we've broken above. This was a lower high. We made a higher high. This was a lower high. This is our FTX capitulated. And in fact, guys, in the group chat back in January, I was saying, if we take this out, 21 to 23k, I was saying to everyone in chat, if we can get above 21 to 23k, I believe that the bull market's here, because this is taking out a lower high. And if we're putting a higher high, that's not a downtrend anymore. We should expect higher prices. So that's why we came back up to here, and all we did was come back to this and flip it into support. If you were here back in January last year on the channel in 2022 January, and we zoom out to the weekly time frame on Bitcoin, I was saying the same thing. Look, this was our high of the range, this was our bottom of the range, but this was the lower high, this was the higher low. And I was saying, if we go ahead and lose this, the bear market's here. So the same thing, just opposite. If we go ahead and break above this and confirm it as support, the bull market's here. And then we saw the follow through in taking out this high, and of course taking out 26.4k as well. So this is why we're getting this pump. Oh, now at 28.5k. Guys, if you are enjoying this video, please do smash the like button, as the algorithm is absolutely trash. Please do leave a comment, whether it's just emoji. It's going to help out as much. Yeah, just help me out as much as possible, guys. And yeah, if you can share the videos, that's absolutely incredible. If you want to find out more information on the course or the mentorship, you can actually, without contacting me. There's a buy me a beer link. Just head over to my link tree. There's a buy me a beer link. You can do that if you want. There's been 2 people that were kindly enough to do that Thank you guys so much. I will buy some beer with that for sure. But yeah, there is also information on the course and the mentorship over there. You can go check it out. You can even take action over there if you want, or you can just simply private message me. The links are all on my link tree, whether that's my crypto Twitter or my crypto Instagram, and you guys just follow me there anyway and private message me there. But yeah, now let's head over to the 4 hour where we'll talk about this rising wedge, which we were saying that we would cover at the beginning of the video. We have this rising wedge over here that we're waiting for a breakout. So of course the target would be back down at about 24.5k if we were to break down. Now this is only 66% chance of breaking down. However, look where our target is, pretty much at the top here. Could we just be pumping there, breaking down, retesting it as resistance, and eventually bleeding down here? What we must realize, look at that resistance over there. That is some sort of support. So could we just fall back down to here and climb back up? That would be a fib retracement. Push, exhaust, continuation. This is a bull market, remember, potentially, because we've seen these weekly breakouts above key resistances, making higher highs. That is not bearish. You can see we're pretty much above all moving averages. However, what must happen now is a retest, eventual retest. But at the moment, we're still going up. The momentum's there. Let's get rid of all the drawings again. Look, the momentum's there with last week's candle, and I was talking about this at the beginning of the week. So again, we're not seeing a dying off of momentum at the moment. We have some patterns that are telling us it could, which are on the 4 hour, this rising wedge over here that we find ourselves within. But again, it's only a 66% chance that it will break down. Of course, that's majority, so it should. But we know not everything here happens as it should do, and especially in a manipulated market. Now, in a bear market, all these bullish patterns don't work. They're manipulating. It's manipulating you to buy a W, to buy an inverse head and shoulders. It may break out, it may not even break out, but once it's met the target, and it might miss the target, but once it's met it, it's going to reverse and continue with this bear market. So if we're in a bull market, what would happen if we actually break out of this bearish pattern? Eventually needs to invalidate it and go back up. So whether that's actually meeting the target and it reverses, or actually just fails, as we saw these W patterns and all these falling wedges and all these inverse head and shoulders failing in the bear market. What if we top out here at 29.5 or 30k, return back down to this golden pocket, which in actual fact we're meant to come back down to about 24.5 down here. But what if we just return to the golden pocket and then zoom off? Look at the moving averages up here. If you lose the 20, the 55 is here to protect you. If you lose the 55, the 200 here is here to protect you. And that's above, well, that's pretty much lining up with the area we're talking about, 24.5k. But again, we cannot ignore the fibs. Once we top out here, it's going to pull towards these fibs. Can the fibs hold? They should do, but this pattern over here says otherwise. Will the pattern actually play out? Remember that if this is a bull market, maybe it shouldn't play out. It doesn't mean that it can't break down and still try and head to the target, try and retrace back to here, but will it be able to reach this level? Again, even if it does, by the time it reaches the target, it should reverse. If this is a bull market, would that not just be us going back to the weekly? Would that not just be a retest of this high that we've just broken, and that newly formed higher high, come back down, make a higher low, and then onwards and upwards to where we're going, to where we're getting pulled like a magnet, guys, to 32 to 38k. We've got a technical target out of the inverse head and shoulders. Please go ahead and smash the like button. It really is appreciated, as well as comment section down below. As we were talking about this in the video, so before I hit record, and I was looking at this ascending triangle, and just at the beginning of this video I was talking about when we scale down to the 15-minute, we're going to look at this ascending triangle that hasn't broken out yet. Well, it's just broken out during the clip, so I'm going to just draw this line on the closes of the candles. That was the highest close. We can see that we're clearly above that, so this is why we're actually heading towards our target over here that we were talking, well, not this one, but what we started with at the beginning of the video, with that Twitter post on the chart over here saying about once we reclaimed about 23k, I think it was at 23.5k, I called it, that it looked like the fibs were calling for 30,000 or 29.5k up here, this 1618 target. There you go. But let's get some more confluence telling us that we are going up there. Go ahead, let's go ahead and do that. So I'm going to look for the highest point. There we go, to the lowest after that. And it's saying, look, 1618 is up there at 29.3k, very close to our target. But as long as we remain above 28k, we should go to 30,000. Zoom out now. Look at that. going past our technical target, maybe a little bit, and then we start coming back down. But eventually I do believe that we will come back up here. It would be immense if we just do that for the rest of the week. We just continue up and up and up. But yeah, I wouldn't be surprised if we do retrace, because we have those bearish patterns. It's just, will we meet the bearish patterns targets? Let's see what happens over these next few days. I'll be here tomorrow. Very exciting times. Like, subscribe, and comment. Take action over on the link trees. You'll find my Twitter and my Instagram. Make sure you're following me over there. And if you just want to find out more information or buy me a beer, that is all on my link tree as well. Cheers, guys. There's a link tree in the comment section or the description down below, or even in the top right corner. You can just click it over here somewhere, and yeah, it can take you to my crypto Twitter, Instagram, where you can private message me. If you want to actually just take action on the course or the mentorship without talking to me, head over to my buy me a beer. Now, I'll bring up a page looking like this. You can even get one single mentorship session anyway, but all the details that you need here, you get 10 sessions, and here you get 30 plus videos, 6-hour course, and yeah, all the information you need is over here.